Hello, everybody. Thanks for joining. I'm Randy Reichert, President and CEO of Skeena Resources. Today, I'm going to talk to you about our company and what we're doing, primarily our development of our flagship operation, the Eskay Creek Revitalization Project. Just some forward-looking statements. Okay, Eskay Creek. Eskay Creek is located in northwest British Columbia in Canada, in an area called the Golden Triangle. There's a number of former producing assets there. Eskay Creek and Snip are both of our projects. There's currently producing mines, Bruce Jack and Red Chris, along with up and coming other projects as well. Should note that this is in the Tahltan First Nations territory. They're a First Nation that's got a long history of mining. They've been mining obsidian for 2,000 years, and were really a part of the original Eskay Creek. One of the areas that really thinks it attracted us to this area was the amount of infrastructure. So first of all, there's a paved highway that goes up to the Bob Quinn airstrip. And from there, there's a 55-kilometer gravel road, all year long access. And then more recently, between the time where Eskay Creek was operating as a small underground mine and now, 3 hydroelectric facilities have been put in place. So these facilities are one of the big reasons that really allows Eskay Creek to be an open pit mine and produce, a lot more tonnage than it was in the early 2000s when it was a small underground operation. So as I mentioned, this is a historical producer. Eskay Creek as an underground mine was one of the highest grade gold producers when it was in operation. It produced 3.3 million ounces of gold and another 160 million ounces of silver. The average gold grade was 45 grams a ton, and the average silver grade was over 2,200 grams a ton. Cutoff grade for most of the operation was greater than 15 grams a ton. That had to do with the mining method, a lot of the production from power using diesel generators, and being a small underground operation. So we've currently recently come out with revised resource and now reserve that we put out a few weeks ago when we put out a definitive feasibility study. The updated reserve now has 4.6 million gold equivalent ounces, made up of 3.3 million ounces of gold and 88 million ounces of silver. The overall grade is 3.6 grams per ton equivalent. So excellent grade. That's really what makes Eskay Creek what it is today. It'll be one of the highest grade open pits around. I'd also like to point out that the proven ounces we have, over 3/4 of it is in the proven category, giving us a very, very high confidence level in the resource and reserve. Moving on now to the definitive feasibility study that we recently put out. So at a base case, we used $1,800 gold and 23 silver, both of those just below the 3-year trailing averages. We end up with a NPV after tax Canadian $2 billion with a 43% IRR and a 1.2-year payback. So really overall incredible metrics. This is a great project. When we look at the cost per ounce, looking at the bottom line, $685 US per ounce over the life of mine. Certainly in the first 5 years, quite a bit lower than that. This is all really predicated on the grade. So 3.6 gram per ton gold equivalent average, as I mentioned. But when you look at the first 5 years, that increases to about 5.5 grams a ton. That's about 5 times the average today for open pit gold mines. We also increased the life of the mine to 12 years. It was previously just over 9. So we added a 3-year mine life there, increasing reserves by about 20%. The capex, we did see a bump in the total cost to build this, up now to $713 million Canadian. That was about a 20% increase. I should add that a lot of the things that were done in this study were really done to build it and to operate it. So this wasn't a study that we put out simply to make it look better. The things that increased the the capex were things we knew we had to have in here. Looking more at some sensitivities, if we were to look at where we're at today in spot prices, would be a 2.3 billion project. Certainly where we see gold going in the future, $2,200 gold and above, it quickly climbs to a 2.8 billion project. But that said, it's also a very robust project, again, because of the grade and the low-cost nature of it. This is a project that will be built. We're not waiting for gold price or hoping gold price stays where it's at. At $1,600 gold, it's still an incredible project. Now, looking at the overall production over the life of the mine. So the bars in gold show the new production by year, and the lines, the gold line, shows the new grade. What you can see in this graphic is that the first 5-6 years has definitely got much higher production levels than in the back 6 years of the mine life. This was intentional. This is partly because we know there's some other sources. So if we look at the first 5 years, average production is about 455,000 equivalent ounces. Over the 10 years, it's 370,000, but we really do believe we can increase that by filling in back end with some of the other things that we have and we plan on putting in. If we look at the two lines, there's a gold line and a gray line, and initially you see that the gold line is higher than the gray line. That was because we went back and we remodeled the resources, looking at mining this more selectively than what we had in the previous feasibility study that was put out in September of 2022. And so just going to add here, this is really in the area now where we think we can fill in, and with projects like Snip or exploration and some other things I'm going to show you in a minute, build that back up and increase it to well over 370,000 average. This was one of the key things that came about in the definitive feasibility study. So for met testing, we kind of went back to basics, brought in a new consultant on this. New consultant kind of had a look at things and really wanted to make some changes, really going more towards the normal testing parameters, because he believed that the kinetics, or how fast the sulfides float, were quite slow in the testing. So he made some changes to the way the tests were done, and also to some of the grind, a little bit finer grind initially in the rougher stage, and a bit finer at the cleaner stage. And what we were able to do is really increase the concentrate grade. So if I show you here, this was the increase going from the gray line in the feasibility study to the gold line, which is the new definitive feasibility study. And that increase in grade was about 74% on average overall. Well, what does that mean? What it means is that if you take the gray bars that we would have been shipping concentrate and now drop it down to the gold bars, you see that over the life of the mine, we'll have to ship, process about 1.1 to 1.2 million tons of concentrate less than we would have if we kept the same metallurgical regime as the feasibility study. That equates to about a 400 million Canadian pre-tax savings over the life of the mine. The other thing that increasing the grade does is it allows us to get better payables from the smelters. So the higher gold and silver grades really allow the smelter to have better recoveries themselves, and therefore they'll pay us more for that concentrate. We believe on average that was about a 4 to 6% increase. And both of those, the decrease in costs and the better payabilities, really go straight to the bottom line. This graphic just shows the average gold price per ounce equivalent that we'll receive over the life of the mine. You see it does drop down later on as we bring in some other sources and are able to get the grades up higher. We believe that will increase again. On average, it's about 84 to 86%, and that includes all the transportation costs, handling costs, smelter fees, penalties, and the like. So this is a net NSR. Okay, so what really drove some of those NPV increases? Well, first of all, we remodeled the ore body with a smaller block size. That increased the grade a bit. We also added on about 14 months of exploration drilling that we did. That was really what drove the mine life to add about 3 years additionally to it. So those were kind of part of the metrics. And as I mentioned earlier, improve concentrates. So those kind of 3-4 things are really what has been driving the NPV increase from what we had before, 1.4 billion, to what we have now, 2 billion. There's a number of things, though, that we did do to kind of de-risk the project. As I mentioned, this was a project that was done to build it. So there were a few things when new engineering team looked at this, we really thought, okay, what do we need to do? So one of those things was a water treatment plant. So making sure that we're environmentally compliant was important. We had hoped that we could maybe put this in and wait until year 2 of operation, but in the end, we thought it was too risky. So that's part of capex. That was an increase there. The other thing was about the permanent man camp. In the feasibility, it was slated to come in year 2. We thought that it would be better to take that temporary accommodations money and put it into a permanent camp, be able to recruit manpower better to a new camp, and also making sure that we had enough rooms to cover the construction period. And then there were some increases like camp operations and travel costs. Certainly in Canada, food and labor have increased over the last few years. Travel costs the same. The other things we did to really de-risk it. So one of the key things that, I'm aware from my past history is that we need to make sure we've got good stockpiles in place when the mill starts up. That effectively will decouple the mine from the mill, making sure that if the mine is having any teething problems at any point in time when it's ramping up, it's not going to affect the mill performance. So we increase the ore stockpile size, allow us to do that. The other thing, by increasing that, it will allow us to have different ore types stockpiled separately, and we'll process those separately, allowing us to target separate concentrates for different smelters. That'll increase the overall payables. The other thing we did is we increased the mining fleet. This area of the world gets quite a bit of snow, so we need to be cognizant of that and what we do in the winter, and we can't plan to do too much in the winter. So what we did, if we're going to mine about an average of 100,000 tons per day, we increased the fleet to allow us to mine 140 to 150,000 tons per day, and then we can mine quite a bit less, 50 to 70,000 over the winter, with stockpiled ore from those summer months being processed over that time. Won't show a whole lot here. This is the slide showing the facilities, the pit. You can see the ore in gold and the cyan, which is the old underground workings. I'll point out one thing here. This is the area where we increase the stockpile and allow us to have those big piles shown in brown. The other thing that I will point out here is this facility up here. So that's our tailing storage facility. It's already a permitted facility. It was permitted by Barrick back in the days when it was operating, and it still has ample capacity with building up the dams on the north and south. We'll have ample capacity for the life of the mine. Some of the other things we did in terms of the mine plan and allowing us to mine more productively and also mine during the winter. So if you look at this phase here, the first phase shown in orange, we really opened it up. It's wider than it was typically in the feasibility study. We're not dropping down in the ore quite as steeply. We're also keeping it nice and open on this face here so that we can manage snow a lot easier. As well, by having a bigger open area, we can operate more equipment and be a lot more productive. And that's what we've done throughout the life of the pit. This figure shows the layout, some of the small changes. Crusher, we've put in a covered stockpile. Again, because of the winter conditions, we felt it was necessary to have a covered bin. So that's what we've done. The brown shows what the stockpiles will look like. And then over on the right side, we see the mill building and maintenance shop and those facilities. In terms of the processing flow sheet, again, this was simplified compared to the feasibility study. There's another change that we made through the MET testing. We simplified it in terms of now it'll be a crush followed by SAG milling, ball milling, and tertiary milling. And then we do a rougher stage. We regrind all of that rougher concentrate. And finally, we go through the cleaning stages, goes through thickening, filtering, and drying. And that's the concentrate product that we'll ship out. By doing this, we've eliminated one of the regrind circuits. and one of the flotation lines. So overall operations will be a lot simpler now with this flow sheet. One of the other things that we believe we can do that we haven't been able to get yet, just because we've been doing the work this past summer, the pit slopes are shown actually to be quite shallow. So generally the pit slopes are 32 to 29 degrees, and we believe that we can steepen those slopes up by dewatering and capture more of this resource that's lying underneath the current planned pit. That's work that we'll be doing over the next 3 to 6 months. The geotech and the well testing was all done this past summer. The other area where we think we have a good opportunity to fill in the back half of the life of mine production is from Snip. So we recently came out with a resource for Snip, about 800,000 ounces at a grade over 9 grams a ton. We've just started on an economic study for this, a PFS level study. We expect that out in the first kind of half of next year. The premise of this is this is another former small underground mine. We'll keep it as a small underground mine and truck that ore and process it at the Eskay facilities. So we really, think conservatively we'll have at least 500,000 ounces that we'll use then to fill in that back end. And then finally, there is exploration, and I'll leave that mostly to Paul Geddes to really go through. This just shows a slide of the Eskay Deeps, really where we're targeting this area out here compared to where the pit is here. Again, we believe there's good opportunities here to extend the life of mine and fill in that back end of production. We're really searching for, an Eskay 2.0 where we can see that 45 gram gold plus, 2,000 gram silver again. We have acquired a substantial land package since 2021. We've grown that from just over 12,000 hectares now to almost 180,000 hectares. There's really good opportunities here for some regional exploration. Again, I'll leave that to Paul to go through. So finally, I end up with really the catalyst. What's going on here? Okay, so where are we at? First of all, the timeline to build this project. We expect to have this into production, starting the mills in mid-2026, with production being a little bit less than 3 years from right now. In order to do that, there's a few things we need to do. The first of all is we've started an environmental assessment that's currently underway. We expect that draft application to go in the next 3 months. Following that, we expect the environmental certificate to be awarded about a year after that, and final permits kind of mid-2025. But that's not going to preclude us from really starting construction work on this. We were already doing some work on the mill pad and infrastructure area. We did some earthworks this summer. That's about 75% complete in that one area. We can do that by a couple of other ways. First of all, we do have a lot of existing permits on this, being a brownfield site, a former producing site. So we've made some permit amendments to that. The other thing is we're applying for a joint application one, or an application for a permit that allows us to take a bulk sample. We expect that to be in hand kind of in May of June of next summer, and that's when we want to start the work and really getting access into the pit area and getting the first pit started, so that in 2025 we can bring in the big equipment and really start the pit. As well, our intention right now is to do a lot of the foundation work next summer, so we can put in the building foundations for the mill along with the mill foundations and do that concrete next summer. The other catalyst that we have, so the Snip engineering study that I mentioned, and then project financing. So that's really the next big step here. We're looking to do that and get a full package together sometime in the next 6 months. Our intention right now is to do something with one of the big streamers, having them do a combination of stream, equity, and debt, providing all three, similar to a deal that was done by G Mining for their Brazilian project. So like I say, that's one of the things we expect in the near term. Or in the next 6 months. This just shows our capital structure and some of the analyst coverage. Okay, And that's what I have for you today.
We'll now begin with a Q&A session, which will start with the people behind Skeena, speaking with CEO Randy, talking about his previous experiences building mines and what he brings to Skeena. We will also be talking about the other management and board members, as well as interviewing Senior Vice President of Exploration, Paul Geddes. We'll then proceed to inquire Randy about the Eskay Creek project and discuss construction, permitting and production, etc. Thereafter, we'll have a detailed exploration overview by Paul and finally discuss how Skeena plans on funding the construction of Eskay Creek and what Randy's vision is for the company. Randy, could you tell us a little bit about yourself and your track record?
Yeah, sure. So I'm a mining and mineral process engineer by education. I spent my entire career in either operations or developing projects. I started with Skeena in April of 2022. The 6 years prior to that, I was with a company called B2 Gold. And I was part of the group with B2 that developed the Fekola project in Mali. It was one of the best kind of developed gold projects in the last kind of 6 or 7 years. And then I brought that on through ramp up and into production in steady state, and then went on to manage their three operating mines in Mali, Namibia, and the Philippines. But yeah, my entire career, I've been in projects previously with the same group of B2 as part of the group that was there for the construction of the Kupol mine in Russia.
What do you consider to be your greatest achievements?
Well, Fekola was a great one. That was something that was done, and kind of brought into production and ramped up and was always, almost seamlessly. So that was great. That one and bringing it and expanding it to over 600,000 ounces a year was definitely something I was proud to be part of.
Excellent. And if I remember correctly, the Kupol mine also produced about 500,000 ounces per annum.
On average, the first year, Kupol produced actually almost a million ounces equivalent.
That will certainly benefit Skeena. But so what are your most important experience from B2 Gold and previous to that BMA that you bring to Skeena and the Eskay Creek project?
Well, it's all the projects really that I've been involved with. You learn a lot of things from, first of all, an operations point of view, and really what parts of a development project need to be done in order to be successful in operations, because anybody can build a plant. It's whether or not that plant's going to be successful in operating. And the good thing about Fekola is there were no hiccups. There were no times where, okay, things had to be changed. We were producing cash flow, from the start. So there's a lot of those things I learned. A lot of things through the different construction projects that I've been at throughout the years, and on how you do things, and more importantly, where are the pitfalls? Where are the areas where you can see troubles? And so in this last definitive feasibility study, that's what we've done. The team that I've brought in now is aware of a lot of this, and through some guidance has made a lot of changes to make sure that the project that we're building isn't going to run into troubles either in construction or in the operations.
Could you tell us a little bit about the team?
Sure. Well, it's a diverse team, of course. First of all, Walter Cole's executive chairman. He's a guy, ex-New York banker, very good ranging financing, and really has brought the company to where it is today. And then as far as the development team goes, we've got first Naylene Morin, I'm going to point out. Naylene Morin is our VP of Sustainability. She's looking after the permitting. She's a member of the Tahltan First Nation. She led their lands department for over 12 years, was essentially on the other side. So she knows all of the Tahltan and what they do very well. She knows the regulators very well. And she knows, all of the important people in government. Along with that, we've built up our kind of construction and engineering team. Scott Fulton has been brought in to run that, along with some other people that I've worked with in the past, really good engineers and managers.
Could you give us an overview of Skeena's ownership, retail, institutional split? Who are the largest shareholders?
Our two biggest shareholders are BlackRock, the group really being run out of the UK, that part of it. They hold over 12%, along with a German fund, Deutsche Valentin, and they've been a long-term holder of us, like BlackRock. Came in early, and they've got something similar, probably just less than BlackRock, about 12%.
How large is the insider ownership?
Insider ownership is reasonable. I'll say none of us were kind of party to early, stock at 1 cent. We've been buying in ourselves at much higher levels and earning in. Certainly, it is the key holding that I have, and pretty well the only mining company now that I hold. All told, we're probably in the 4 to 5% range is what we hold long term.
We'll now go through the changes in the new feasibility study, previous work done, the construction schedule in detail, permitting and its timelines, and much more. You did a lot of work or pre-construction work on Eskay Creek this summer. Could you summarize all the work that you have carried out on Eskay Creek?
Sure. Well, at the site, we did a lot. Other than some exploration drilling, we brought in the assay lab. So we've got that installed and we got that going. We'll have that certified next year, so that'll allow us to get much quicker exploration assays in next year. And it was really just bringing that assay lab in kind of 2 years before when we had typically install it as part of construction. The other thing we did, that mill pad area I was mentioning, so we did about 75% of the earthworks completed on that. We would have finished it, but we want to do the portion over the mill, we want to drill and blast that ourselves. So we were using contractors past summer. This summer coming up, we're going to be doing most of the work ourselves. That's what I'm used to, and we'll have a lot better control by doing that. But really on the engineering side is where we've done a lot. So we've done a lot of work advancing the engineering for both permitting and also the feasibility study, but getting the detailed engineering, ready. So the basic engineering has kind of been completed now on the plant, and we did a lot of work in the engineering of the mining side of it, really optimizing the mine side and looking at improvements that we could do there. So part of those improvements are really switching to a much more selective mining method. So in the feasibility study, we were using face shovels, which typically aren't that selective. So we'll mine this a lot more like Fekola, Otjikoto B2 mines are mined, along with many other companies now, and the way they're mining the high-grade gold mines, which is basically taking a 10-meter bench and splitting it into 3 horizontal flitches and mining it a bit more selectively that way. So that's kind of a lot of the work that we've been doing.
Could any of the money that you have spent be subtracted from the 713 million Canadian capex? Or
no, not really. That'll start now. So that was updated for where we're at this point.
How far advanced are you with detailed engineering?
We are looking at things like the mill. We're just ready to start on that. When we look at areas, for instance, on the roads, water management, and the pit, we're well advanced in a lot of those areas.
Could you give us a summary of the major changes in the recent definitive feasibility study compared to feasibility study from last year?
To summarize it overall, first of all, it was the resource change. So resource definitely grew. The reserve grew by about 20%. That was first change. Part of that predicated on about 14 months of additional drilling. And then there was the changes to the metallurgy, the met testing that allowed us to really produce a much higher grade concentrate than what we were seeing in the feasibility study. We simplified the flow sheet. So again, eliminated one of the regrind mills and eliminated a lot of flotation banks. And then on the mining side, moving to a more selective mining method allows us to get a little bit better grade, not mine as much waste, dilution, and then how we phase the pit. So we really opening up the phases, making them larger, making it easier to mine during the winter, and then of course increasing the mining fleet to allow us to mine higher rates in the summer. And then finally, it was some of the other changes that we made, really looking at we put in a water treatment plant, make sure we're environmentally compliant right from day one, and also moving that permanent man camp in earlier, which will allow us to, recruit better personnel and make sure that we've got more than enough rooms over the construction period.
With that, I would like to speak a little bit about recoveries. Your average gold recovery is 83%. Do you think that you could improve this by further metallurgical test works and fine tuning?
Yeah, so the met testing this year kind of changed. So we now have about an 83-84% recovery on gold, which is right around where it was in the feasibility study. We did have an improvement in the silver, going from 88 to 91% on the silver. We do believe there's a bit more optimization there that can be completed, but that's kind of where we're at right now. Other optimizations really will only be done once we've got the plant running.
As you said, one of the most significant improvements with the definitive feasibility study was that you reduced the mass pull quite significantly and increase, so in other words, increase the amount of metals in a ton of concentrate. What payabilities do you expect to get on average on your gold and silver?
Yeah, so when we look at the payabilities or direct payabilities before we take off the transportation and smelter charges, we were able to get that, into the 93, even in some years up to the 96% range. As I showed the one chart, after we take off the transportation and handling charges, the smelter treatment charges, that drops to about 84 to 86%. So that's true NSR.
The cash cost was similar to last year's feasibility study, which is good. So what measures have you taken to reduce both operating and capital costs?
So kind of the big thing there, certainly the ounce production increasing helps that. So your costs are spread out over some more ounces. So that allowed us, to keep that reasonable. The other changes we're making, being more productive in mining certainly was a driver for keeping our mining cost in check. So those couple things. On the processing side, not too bad changes there. Through the new metallurgy, we don't think we have to use high chrome grinding media, for instance. So that was a savings there to offset, say, some of the labor increases that we had.
In year 5, you will expand the processing capacity from 3 million tons per day per annum to 3.5 million tons per annum. Could you explain how, why, and the capital cost of it?
Yeah, sure. So, and even ahead of that, we'll put a pebble crusher in year 3. So when we start out, the ore is typically a bit softer and it's higher grade. So year 3, it starts getting a little bit harder. We add a pebble crusher that keeps us at 3 million. And then in year 5, and as you can see, the production, starts to drop down. So that's when we increase the throughput by about 20% to bring those ounces kind of back up. Again, then we'll feed in some higher Snip ore. We'll feed in some other sources again. But that'll allow us to keep the production levels higher in those later years. As you can imagine, there's quite a few fixed costs in a project like this. We have a 55-kilometer road to maintain, along with quite a bit of snow during the year. So keeping our ounce profile higher over a longer period of time is important to all-in sustaining costs.
And what's the capital cost of the throughput expansion, ballpark?
It's very little now. So one of the things we also did is we are actually installing mills, the grinding mills that are going to be capable of 3.5 million tons per annum. So right now our increase is only going to be in the order of maybe 5 to 10 million. And a lot of that is because we've done some of that work up front.
There are other metals that you potentially could economically recover, such as antimony, there's lead, zinc. Have you done some internal research and modeling on this? And what would you like to share with the audience?
Yeah, one of the things we did not include in the economics were, we know at different periods of the life, we can get additional payments for some other metals that we have. So initially, the antimony is quite high. That's a metal that is becoming quite strategic in the world. At some points, it's a penalty. We actually produce it in enough quantity at the front end that we'll get value for that. And then in the mid to later years, we have years where we have lead and zinc that are high enough levels that we'll also receive some amounts for those as well.
So besides Eskay Deeps, what potential for underground mining is there at Eskay Creek?
Yeah, one of the things we really didn't touch on. So if you look at the pit section, there's quite a bit of ore below the pit. Especially there's one zone called the NEX, and part of it was mined previously, again, in previous operations. We haven't done a lot of work on drilling that off yet. So there is ample opportunities there. Also, we haven't done a lot of work drilling some of the lower mudstone units that are there that will typically have pretty good high grades, and that could allow underground mining there. So some of those areas we really need to do work on, but it's nothing at this point. It's going to really grow the reserve significantly. So we'll wait until after operations to really focus on that.
Could you walk us through the earlier works, construction phase, and following commissioning and ramp up, include major milestones?
Yeah, sure, absolutely. So in the summer of 2024 is when we want to start doing the foundation work. First of all, complete the earthworks for the mill pad and infrastructure area. Followed by that by doing the building foundations along with the grinding mill foundations. So a lot of the concrete work next summer. Along with that, from the JA1 permit, we want to get the access haul road up to the pit started, get the pit area established as well, and then get the haul road out, at least the pilot road out to Tom McKay, the tailing storage facility, get all of that established next year. Along with, we've been ordering the long lead electrical items, doing that. And then in this kind of spring of 2025, we'll start back up. We'll put the mill building in place. We'll bring in the big equipment for the mine fleet and get the pit really started. And then middle of 2025 is when we expect to get our mine permits. And that's when we'll finish off the construction, fill in the mill, install the grinding mills, flotation circuits, and the rest of it, bring up the rest of the power line and get the power in connected into the site, and progress and build up the ROM area, build up that for the stockpiles, and then finally build up the ore stockpiles for startup.
What permits do you need in order to start construction this summer?
Sure. So for this summer, we're working on a permit amendment. That's the first one, along with JA1. So the joint application 1 permit for the bulk sample, we expect that kind of end of May, beginning of June of next year, and that'll allow us to build both of the haul road into the pit area itself, get that established in the road out to Tom McKay, along with really even doing the earthworks for some of the ponds, collection ponds, and the camp area. So those are the key ones for next year.
Super. And could you walk us through the permitting process? I mean, as you mentioned, you need a JA1, you also need an environmental assessment certificate for down the road, and the JA2, and the expected timelines for those.
Yeah, so the timelines. So the environmental assessment draft application is being developed right now. It's well underway. We expect that to be done by the end of March. So the application going in the end of March 2024. Typically that review period, and we signed a process charter that we put out last year that really goes through and shows the overall timeline for the permitting. So the EA process expected to be 1 year of reviews until the final EA application is finished. The EA certificate expected kind of the end of Q1 2025. Following that, permits, the final permits, JA2, will follow kind of in 3 months after that.
I have to say that I enjoy your strategy of sort of pushing as much construction as you can do, as you're permitted to do, to really push the environmental agencies and the mining agency to be a little bit quicker. I think it will work.
It is an historic mine. It's been there. If we were going to start small underground again, we would already have the permits for that. Everybody, at Tahltan especially, they know Eskay Creek. A lot of them worked at Eskay Creek. So they know this as an operating mine. So that really kind of helps and, us drive this forward making some changes and getting some of that early construction work done, maximizing that. Because the payoff on this is so quick and the upside. So really, one of the things I haven't mentioned is, this will produce about 500,000 ounces equivalent in the first year. When we look at similar companies today and their market capitalizations, they're in the 3.5 billion Canadian above range. So that is, the end target, and why we believe the quicker we can really get this into production, the quicker we'll get a re-rating on our overall share price.
You mentioned the Tahltan First Nations. How have you built your relations with the Tahltan First Nation?
Well, it started well before my time. And really it started when we first did a deal with Barrick to get Snip. So from that time, we've been working very closely with the Tahltan and Lands Department and what we're doing. When we then acquired Eskay Creek, some of the first studies that came out, we showed them, we talked to them about it. Even before we got going on an open pit study, we asked them, we said, look at, would you be opposed to an open pit? How do you feel about this? And they were very amenable to it. And so we went ahead. One of the other things, if you looked at the original preliminary economic assessment, it had the potential acid generating waste being stored along with the non-acid generating waste in a large dump. They were uncomfortable with that, so that when we did the next study, the preliminary feasibility study, that was changed. So now our plan is to haul that out to the Tom McKay storage facility, and they were happy with that. So, it just a couple things of where we've been working with them in tandem right throughout since we really acquired these properties.
How far advanced are you with negotiating and signing an impact benefit agreement?
It's coming. The Tahltan are very knowledgeable. There's many mining projects in the area. They know a lot about it. That said, a lot of the details we've already been agreeing to. We probably think we're in the 85% complete range right now on the IBA, but it's the last bits of the most difficult kind of bits to complete. So, we're hoping to get back into that in the new year and really start pushing that along, because we know this is a project that can really benefit the Tahltan, and the quicker we have that IBA in place, the better it'll be for everybody.
Say that you would make a significant discovery at Eskay Deeps. How would you go about accessing the ore?
So, the likelihood of where that is in the depth. So, last year we put out a hole where we intersected some mineralization that graded quite well. It was 4 grams a ton. It wasn't 45 grams a ton. But it was a depth of about 850 meters. So I suspect that if we do encounter something there, it'll be a shaft in an underground mine. So we'll probably drop a shaft in there, and then at some point put a drift and access that from the pit as well.
When could it be brought into the mine sequence, realistically?
It's just far too early to say. It really depends on when we discover something that's that economic. And then we've got a lot of economic studies to do, engineering studies to do. I would be thinking that this is something that would, if we encounter it, would be at the back kind of end of the mine life. But certainly, it would be a game changer for the company if we discover another ore body with that higher grade. And it would certainly be something that would be pushed into development and operation as quickly as possible.
So what can you tell us about the Albino Waste Facility?
Yeah, so the Albino Waste Facility was previously where the tailings and the waste rock was put. Before we acquired the project from Barrick, they gave up their mineral claims over the area because they had already done a bunch of drilling below the lake, and there's no economic mineralization there. That said, the tailings and the waste rock that has been put there and stored there has always been maintained by either Barrick or us. And so there was a ruling on this in 2022 that gave the rights to this to the holder of the mineral claims, a prospector in the area. We've disputed that. We took that to court, and most recently, we've been successful in getting an appeal. So that appeal will be heard in May of 2024. We believe it's a landmark case because there's definitely conflicts between the legislation in the province governing mineral claims or governing storage material and environmental liabilities like are typically there with TSFs. So that'll be heard, and we're hoping that we're successful on that. That said, that material, and there's probably, we think there's maybe about a year of material there. We're not too sure. There's more drilling to be done there, but one way or another, that material really needs to be processed at Eskay Creek. If we're successful, it'll probably come into the mine plan early. If we're not successful, it'll probably come into the mine plan quite a bit later.
Yeah, it makes sense. But it's a good bonus. I mean, adding 1 year makes a difference. What grade does approximately have? Silver and gold?
Yeah, it's what we've drilled off so far is kind of like our initial average for the mine. It's probably in the 5.5 range. We certainly have more drilling to do there to confirm everything up.
Let's move on to Snip. So you're conducting an engineering study for Snip, which will answer a great deal of questions. But could you give some color on how you would mine Snip and when it would make sense to start shipping ore to the mill?
Sure. So Snip would be mined with various mining methods. That's what we're really looking at right now. Keeping it fairly small in nature. So probably starting out at about 600 tons per day. We feel we can get, good grades out of there up to about 12 grams a ton using various mining methods, probably 3 different mining methods being long hole, cut and fill, and resu mining. Again, focused on getting the dilution down and maximizing the grade. The biggest thing that has to be done to get Snip into production is connecting the road. So right now there's a gap of about 17 kilometers that needs to be put in place that would allow us then to haul back into Eskay Creek. So that's what we're kind of looking at. I believe it would probably come in, towards the end of the second or third year of operation. It'd be nice to, go and build it right now, but we're focused on, and we have enough capital spending requirements for Eskay Creek that we would probably really embark on that after we're in operation. And so we, looking to bring it in at least year 3 and kind of mine that over an 8 or 9 year period. That's the overall what we're looking at. But as I mentioned, we are doing an economic study on that right now, and when that comes out, we should be able to show kind of what the value of it is to our shareholders and the project.
What permits do you need to develop Snip?
Well, Snip, interestingly, again, has a lot of the permits. It was a former producing mine. There was a mill there that's been since the area reclaimed. If we start out, Snip before was mined at about 450 tons a day. So as long as we're within 150% of that, or call it 675 tons a day, it's really just a matter of revamping the mine plan and getting our authorization to work in there again. There might be some small environmental studies required about hauling the ore on the road. The road is already permitted, so there's really should be no issue there. It's just a matter of maybe the impacts of those trucks hauling there, and that'll allow us to get into production there.
We have now arrived at exploration, where Paul Geddes will give us a good overview of the Eskay Creek and Snip deposits. We will also be speaking about regional exploration opportunities in Eskay Deeps, which could be a major catalyst. Welcome, Paul. Could you tell us a little bit about yourself and your career?
Hi, Jasper. Thanks for having me. Yeah, I'm the Senior Vice President of Exploration and Resource Development with Skeena Resources. I've been with the company since 2018 and seen the Eskay Creek project through from when we first acquired it to its present status. Prior to that, well, I date myself. I actually started my career in 1996 with Noranda Mining and Exploration in Northern Ontario. And then just subsequent to that, just progressive career development over the years through working for Wallbridge Mining, North American Palladium, Inco, Barkerville Gold Mines, which was part of the Osisko group of companies, and then ultimately with Skeena Resources, which is where I am right now. Okay, well, it's a pleasure to be here and to present basically what we've produced with Eskay Creek over the last few years, and essentially provide an exploration overview as well as an outlook for 2024. The obligatory forward-looking statement. So let's start off by just putting it all into context. I've got my laser pointer here. We can see the Eskay Creek property, which is what we're going to talk about, and then various other lands that we have in the Golden Triangle that we're also going to discuss later on very, very quickly, because we've done a considerable amount of regional grassroots exploration over the last year. As well, we're going to touch on the current status of Snip, and then basically be open to any questions. So our current reserve statement is about 4.6 million ounces at a very respectable grade of 3.6 grams per ton gold equivalent. The resources in the M&I categories are roughly the same, with 5.5 million ounces contained on the books. Now, what does this mean? Well, when you engineer an open pit for your reserves, you do not necessarily take everything. So that means that if there were certain things that changed, factors, as an example, gold price, pit wall angles, metallurgical recoveries, there is a chance that there is still more mineralization that could be incorporated into the reserve statement. But again, that's more what Randy was talking about.
I mean, you published a new MRE. You added some, I think, was it 400,000 ounces or of gold equivalent, 432?
Yes.
Yes. So, okay. So I guess we could start by what changed and what prompted you to do a new reserve and resources rather statement.
Yeah, that's a great question. The organic growth essentially was attributed to the work that we did over the last few years in the 21A West zone, which I'll show everyone here in a little bit, as well as the development of a new open pitable resource area that we called the 23 zone. And again, these were lower grade portions of mineralization. So they essentially balanced out the grade from other levers that we had pulled with respect to the resource estimation methodology. But globally, what we did is increased the tonnage significantly and the contained ounces within that. Now, as part of that resource, we also added some tweaks. So as an example, our measured went up considerably based on just the number of holes that we used. Turns out we were a little too conservative when we did our classifications in previous resource estimates. And as well as we did a lot of reconciliation against what had been historically mined. Now, when we did that previously, we tended to be underestimating the historical mining. And so again, if we apply that to the global resource of what we have calculated, there's a chance that we were selling ourselves short. However, this year, with the 2023 resources, we more closely associated with the historical production and reconciled it better, again, adding a lot of credence to our geological models.
So you did some changes. I mean, you changed mining method, metallurgical went down for gold, but up for silver. Could you add some color to that?
Yeah, again, great question. So from the perspective of our resource, and again, not applying economic factors to this, again, the resource, when you create the open pit, to quote the resource, it's a revenue factor 1 pit. And ultimately what you're just trying to do is determine what has reasonable prospects for ultimate economic extraction. So again, the number is going to be slightly bigger than what you would see in the reserves. You're always going to see a differential there, a delta. Now, we incorporated new recovery values for the gold and the silver. So what did that do? Well, in certain places, the adjustment of those recoveries kept the pit shapes basically the same as they were last time. However, in some of the lower grade areas, the pit did not basically take those portions. And again, so, those ounces then were no longer on the books. However, to compensate for that, we also changed the mining methodology. So as opposed to using very large blocks for an open pit situation, Randy, when he first came here, decided that we were going to mine with more selectivity. And because of that, we elected to reduce the block size that would be ultimately more reflective of the mining method going into the reserves and very defendable as well. So it makes a lot of sense.
2022's and 2023's MRE, did both have the same cost assumptions?
Yes, both of them did. The only change that we made with respect to cost assumptions, again, for determining the open pit factors, were changing the metallurgical recoveries. Everything else stayed the same. Gold price, cost assumptions, pit wall angles, sell price, etc. Okay, so this is just a long section where we're looking east through the deposit. You can see towards the bottom of the pit, this is the next zone, so it's considered the northern extension. In the light gray, you can see all of the former mine workings from the underground work that was completed by Barrick. We do have underground resources. Again, not as many underground resources as we have in the open pits. And then finally, towards the south, we have the 22 zone and an underground component there. You're going to see that I'm talking about two very specific rock types here, and this is the contact mudstone. So this is this black line on the top here, which eventually erodes and daylights at surface. And then finally, the lower mudstone. Why are these important? As well, they're different sequences. They're time breaks in the genesis of the deposit. And why don't we just take a look at that? So this is just a 3D representation of a snapshot in time, shall we say, of when Barrick was mined. There's the development, there's the gold mineralization as they saw it at a 15 or 30 gram per ton gold equivalent cutoff. And in the black, you can see that contact mudstone, which is very laterally extensive. Now, however, when we look at this through a different lens, and again, referring back to those commodity prices, at a 0.7 gram per ton gold equivalent cutoff, you can just see how much more mineralization there is. It's a very large, very well endowed mineralized system. Again, that contact mudstone continues all the way to depth. And we'll talk more about the NEX zone and the Eskay Deeps later on in this presentation. So what is Eskay Creek? Largely, it's a volcanogenic massive sulfide. So what does that mean? If you've seen the black smokers that are witnessed on National Geographic and the submarine studies at the Mid-Atlantic Ridge, you'll see what's called a black smoker. And the black smoker is basically fed by hot fluids and a magma chamber underneath. And what this does is it scavenges minerals, including, the gold, the silver, the copper, the lead, the zinc. And as those hot fluids rise, and then they ultimately interact with the incredibly cold seawater at basically 1 degree Celsius, they precipitate. And those minerals form this black smoke that occurs up here. Now, what that will do is ultimately form a plume and then gradually just settle down onto the surface of the seafloor. So most VMS deposits are typically, gold and silver depleted in a relative sense. They contain copper, zinc, and lead. But Eskay Creek is a little different because it has extreme gold and silver enrichment, as witnessed by those grades that I showed you earlier. And then the mineralogy is a little bit too different. We don't see as much copper, lead, zinc, base metals, and massive sulfides that you would see in other typical VMS systems. Now, in conjunction with that gold and that silver enrichment, we get what we call the epithermal suite of elements. So mercury, arsenic, and antimony. And this is all occurring at lower temperature conditions, like less than 200, maybe even less than 100 degrees Celsius. And they're also shallow water. They only occur a kilometer below the surface of the ocean. And again, if we just take a look at the geology, it's essentially a layer cake situation. Eskay Creek and the mineralization that was preferentially mined by Barrick is up here in the contact mudstone. Okay. And then we get rhyolites underneath that. If you remember that slide where I showed you that lower mudstone, we also see mineralization in there as well. And then even further below that is what we call the even lower mudstone, or the spatsizi. We've also noted mineralization in that area.
From my understanding, most of the gold is hosted by the rhyolite and the contact mudstone. So in the open pit, how much of that will be mined comes from is hosted in rhyolite, and how much is hosted in contact mudstone? Or could you add some color to that?
Yeah, that's a great question. So again, Barrick preferentially mined the contact mudstone because, as I'll show you in a slide here in a second, that's where the extreme grades and the very high enrichment of the gold and the silver occurred. Now, directly below that is a rock type that we call a rhyolite. Now, in the rhyolite, this was lower grade. This was, 4 to 5 grams per ton, but that didn't meet cutoff at the time. Where am I going with this? Barrick preferentially mined the contact mudstone and completely left all of the mineralization that was sitting in the rhyolite because it didn't meet their economic criteria. The bulk of the open pit is on a tonnage weighted basis, probably about 30% mineralized contact mudstone as it stands, because again, it's been depleted by previous mining. And on a tonnage weighted basis, 70% is situated in the rhyolite. And then our new 23 zone, which we'll discuss here in a second, is also we're seeing mineralization in the lower unit, in the lower mudstone, and what we also call a dacite, which is similar to a rhyolite flow. Now, what's very important here is that all of the impurities, the mercury, the arsenic, the antimony, were specifically situated right here at the contact mudstone, which means all of the mineralization below, in a relative sense, was very clean. We do not see that mercury concentration. The arsenic, well, it's kind of all over the place. And the antimony, again, is very specific to the contact mudstone. So the most important aspect of this entire mineralized system is what we call a rift. And essentially what it is if you can imagine that this is on the bottom of the seafloor, it's a fault. And inside that fault, we see different blocks that get dropped down over time as the fault is moving. This is a very, very well understood geological model. Now, if you put some sort of intrusive body or a heat engine below that, well, heat rises and it's going to take in the fluids and basically push them up planes of weakness. And, you get a plumbing system and conduits and mineralization. So what we know for sure is that the mineralization for an Eskay Creek type deposit is very much limited to this basin. And it's critical for the plumbing system. Now, if we just do a generic cartoon section through any portion of the Eskay Creek deposits, this is what we see. So imagine here, this is all seawater. We're about 1 kilometer down at the contact. It's about 1 degree Celsius. And we've got our basement rocks, which are the basement to that rift. And then we have what we call a period of quiescence. And during that period of quiescence, or a time break in between volcanic events, we see sedimentation. And this is our even lower mudstone, which is occurring right here. We advance. There's another volcanic event. And again, dacitic rocks in the Bruce Glacier Formation. And then again, in that time break, we also see additional contact or certain mudstones forming in between. And then another volcanic event. And this is our rhyolite sequence. Okay. These black lines represent the faults of that rift system that we were discussing. And again, those are the conduits for the fluid flow. Now here's where the real magic happens. This is the contact mudstone. This is where Barrick was preferentially mining and extracting all of the mineralization when they were producing. Now, as the fluids are rising up these synvolcanic faults, okay, they interact with the cold seawater, and coming back, these are the black smokers. This is where the mineralization is basically being deposited and created. And we see those situations whereby you'll get the contact mudstone mineralized. It'll be a convection cell of recirculating seawater. And also you'll get mineralization that sits inside these synvolcanic faults. And we've got numerous examples of those. And again, basically all over the entire deposit, different types of replacement. But what was interesting is that we also discovered new mineralization sitting in the lower mudstones. The even lower mudstones and the lower mudstones. So this right here would be equivalent to our brand new 23 zone, as well as mineralization that would be sitting down here. Historically, the majority of the exploration has all occurred in the contact mudstones. Not necessarily as much in the rhyolites until, again, Skeena looked at this through a different lens. And then finally, coming down here to the lower and even lower mudstones, that's really been undeveloped. And I'll show some really exciting results that we got in 2020 about the even lower mudstone. And then finally, the entire system is capped off with a basalt or andesite flow. Okay. And what happened is you would get volcanic activity rising along these synvolcanic faults, because again, they're planes of weakness, and they would feed the overlying lavas, which ultimately capped the system, plugged it, and stopped it. What I really want to point out though here is, as an example, if you had mineralized contact mudstone up here and your hot fluids are rising and dumping mineralization here, it's very difficult to have isolated mineralization in this portion of the deposit without seeing something above it. That'll tie into Eskay Deeps and why we're very excited about it. Okay, and just a plan view of the Eskay Rift again, so that you can see, the termination point, which would be equivalent to out there, as well as all of the faulting that we see within the deposit. We're going to come back to this terminus, this point right here at the northern extension, because it looks as though the deposit had ended, but that was not the case. Okay, to add some more color, we're going to talk about the 23 zone, which is sitting in behind the plane of this long section, and also the new 21A West zone. Again, these are going to tie into what we've learned and what we saw in the deeps. So this is just your typical stratigraphic section. Here's surface on top. We're looking through a section of the 21A zone. These are our basalt cap rocks. Again, remember, those are the rocks that basically stopped the entire system. Immediately sitting below that is the contact mudstone. And immediately below that, in this lighter gray, is the rhyolite. You can see some of the bonanza grades that were coming out of here, like 6 grams per ton gold over 34 meters, 21 grams per ton gold over 35. Now, when we were drilling this for infill, we elected to test the hypothesis that there would be more mineralization sitting underneath it. So we allowed these drill holes to run. Basically, we went fishing. We did some exploration. Here you can see in the lower mudstone, we had a great intersection in 2020, 12 grams per ton over 6 meters. Okay, well, it was sort of closed off by each of the drill holes on either side of it. They didn't really hit anything, but it demonstrated something very important, is that the system was still alive down there and it was producing. The hypothesis was correct. Better yet, this other drill hole, 290, took all the way down to the even lower mudstone, 6 grams per ton over 4 meters. Again, granted, these other 3 drill holes didn't hit anything down there. So we thought about this and we're saying to ourselves, okay, well, if that's replacement style mineralization, it must have come from somewhere. And it couldn't have come from over here because there's no mineralization based on the assays in these drill holes. It had to have come from a potential synvolcanic feeder, which is sitting over here. So if we just slide that section over to the east a little bit and take a look at this barren area, this is a problem that we faced. These are drill holes from historical operators, and you can see that they're pretty thin with respect to the grades and the widths, but the problem is they only selectively sampled their drill holes. They only sampled what they thought at the time looked good. Now, what Skeena does is we sample our drill holes top to bottom because we're looking for that, lower grades, 3 gram type mineralization that may have been overlooked by our predecessors. Unfortunately, all the historical core prior to Skeena arriving had been destroyed and it doesn't exist anymore. So, unfortunately, we had to re-drill. Now, if you look at that, the historical data does not indicate any potential whatsoever. However, we went in there and we did some drilling and we sampled our holes top to bottom. And you can see what's occurring here now. Like, we're literally meters away from a historical drill hole, which ran nothing. And we've got 2.14 grams per ton gold, 14 grams per ton silver, over 60 meters. And it's hosted in that lower mudstone and dacite rocks underneath it. So again, it's clean. There's no mercury, there's no antimony, there's no arsenic. And that's common for absolutely everything around here. Well, this evolved. We kept drilling and we kept making the system bigger and larger. And that was part of the organic growth that we were discussing in the resource model in how we added tons. Now, another system that we worked on too was the 21A zone. We came in, these white traces are intersections from historical operators. You can see the pit for the 2022 feasibility limits, which is very, very close to the 2023. And you can see that there was basically no drilling. which occurred over here. And if there was, it was again selectively sampled. So we were drilling something else. We had our lateral hole go a little bit further. In 2021, hole 872, 1.3 grams per ton over 20 meters. On its own, not particularly exciting, but what would happen if we extended that up because it was a synvolcanic fault that had been mineralized? Well, we drilled hole 997, 9 grams per ton, 13 silver over 34 meters, sitting directly below the contact mudstone. What's important here to realize, though, is there was no intersection of mineralization in either of these two drill holes. So the contact mudstone, even though it should theoretically be very well endowed with gold and silver mineralization, didn't have anything in it. We continued to drill, and again, we made the system larger. So again, you can see the geometry of this here. It's one of these vertical synvolcanic faults, and the fluids were rising up towards the contact mudstone and ultimately had to come out and deposit those minerals on the paleo seafloor. We did drill in this area right here, and we didn't get anything. But that's not the kiss of death, shall we say. What we believe happened is that mineralization was actually exhaled over here on the west side of the 21A zone. So basically, that would have been one of those black smokers that was sitting right on the seafloor. So again, why is this important? Well, if you see mineralization in the footwall, in these rhyolites, and again, those are tremendous tenors and grades, you should eventually, within about 100 meters, see something in the contact mudstone. Very important pathfinder. And again, if we just take a look at one of the sections past that, you can see again, the tenor is absolutely tremendous. 47 grams per ton over 12 meters, 20 grams per ton over 24. So this is another aspect of the resource organic growth that occurred in 2023, because these drill holes were then subsequently incorporated. We essentially performed geological alchemy, where we took what was considered to be waste rock and converted it to ore, which was fabulous for us.
Yes, here it is. The potential synvolcanic feeder structure. Do you expect there to be more of these sort of structures in the pit that you don't know of, or do you perceive the pits to be quite well defined in terms of resources?
That's a great question, and we interrogated the data, to great lengths to see if there were any more synvolcanic structures that occurred within the pit or very close to the pit. And at the end of the day, this was the most obvious addition that we could make, and we didn't really see anything else within the current open pit and the reserve pit. So we're very satisfied that what we have is what we have. Now, having said that, there's considerable occurrences of mineralization which sit below the reserve pit. So as an example, if we were to change the pit wall angles, again, we're using very conservative numbers right now. We believe that we can increase those pit walls. A change in commodity price for the better, then what would happen is these pit shells would increase and probably start grabbing additional mineralization that is sitting below the current resource pits. And there's numerous occurrences of this throughout the entire deposit.
By the way, do you think that 21A zone and 22 zone, those pits could connect, or that there could be mineralization between that? Have you drill tested that?
That's a great question as well. And we thought the exact same thing. This area in through here was drilled by our former operators. Now, again, the same problem. They would drill a hole, they would be very selective with their sampling, and, it didn't look like much. So we went in and basically, re-drilled a good portion of this to determine if there was any more mineralization that we could use to connect up the 22 to the 21A zone. Basically, the 22 zone is sitting by itself. We do get indications of mineralization in here, but at this point in the game, nothing that connects enough or has grade enough to be economic.
We talk near pit exploration. Where do you see the most potential for resource growth?
Well, that's a great question. We did a lot of work down here in the 22 zone this year. We applied a few thousand meters of drilling, and the idea was to expand on the 22 zone to make it larger. Those assays are still pending, so stay tuned on that.
What cutoff grade do you need for new material to be economically viable?
Yeah, well, that's a great question. So as an example here, this is hole 947 in the 23 zone. Again, this was never incorporated into any open pit, and it's 2.14 grams per ton over 60 meters, combined with, say 1 gram per ton over 90, combined with 1.3 grams per ton over 43. So if you average those, and again, that's what the block model and the resource model does, it would probably come out to be about 1.5 grams per ton. So the bare minimum in my mind is you would need about 1.5 to have break-even economics at least. And again, it has to be really close to surface, because if this was, as an example, maybe another 100 meters down, you wouldn't be able to justify excavating all the barren waste rock above it to get to this, right? So the closer this lower grade mineralization is to surface, the better chance it has to be economic and makes more sense.
By just doing in-pit exploration and not changing the actual pit shells, where do you think that you potentially could get up to in terms of adding resource?
Yeah, great question. Instantaneous gratification that is sitting right next to the pit, we're starting to run out of options, because again, it was pretty well drilled by historical operators and then subsequently by Skeena over the last 5 years. So unfortunately, as an example, the idea that we would have mineralization between the 21A zone and the 22, that's now been essentially sanitized. We can also look into some of the lower units sitting out in here. The 23 zone, as an example, has the potential to increase in size as we move our way towards the south and southwest. However, would it be defendable at the known grades, say 1.5 grams per ton is what we can expect, to generate its own new pit right on surface? So again, we're being very pragmatic about this. If we don't see very obvious signs that we're going to drill something that will eventually one day be economic, we're placing focus on other areas. Okay, well, we'll keep on with the Eskay Deeps discovery, which occurred in 2022. Well, in 2022, we put a hole down, and that hole was 1081, and we intersected essentially 4 grams per ton gold equivalent over 32 meters. And that was at a depth of 850 meters vertical depth. And again, there was no contact mudstone mineralization. There was none of that super high grade. It was all footwall hosted mineralization like we saw in the 21A West zone. And if we look over here at the map, there's the location of 1081. It was a vertical hole. It went straight down in the white. And then all of these little black dots are former operators' drill holes that essentially did the same thing, went completely straight down. Now, part of the problem is, based on methodologies of drilling at the time, a lot of these drill holes didn't make it down to target depth. And then also, as I elucidated in the 23 zone, there was a lot of selective sampling. So if the drill hole did manage to make its way down to the contact mudstone and the operators didn't see anything visually spectacular, they would essentially just drive the drill hole a little bit into the rhyolite, say, okay, good enough, not sample it, and try again. So the Eskay Creek Deeps discovery. Well, proof of context. This is the NEX zone over here, and we're going to look at a section through the deposit. This is towards the north. This is towards the south. We can see here the existing mineralization from the resource model, the mine workings, and the feasibility pit. Here's that black contact mudstone, which comes all the way down and extends, well, basically to this drill hole here, which is the deepest drill hole on the property by one of our predecessors. And what I've also done here is, on the historical traces, highlighted any anomalous mineralization. Now, you're not seeing any anomalous mineralization because selective sampling, or certain drill holes didn't get down to target depth. As an example, this one right here. So then, why on earth would we drill a hole between existing drill holes in the Eskay Deeps if the indication was that there was nothing there? Well, we did a little bit of work with some structural geology. We had a new geophysical data set. which indicated that there were some offsets, and I'll talk about that in a second. So we elected to do this drill hole. We came all the way down, again, right below the contact mudstone in 1081. This is where we hit the 4 grams per ton over 32 meters. This actually continued into various other lower grade sections that continued all the way through down to the lower and the even lower mudstones, but just not as significant as that. What does that demonstrate? The system was still alive. That is the most important part. And again, if we just look at a cross section through this, again, here's surface. We're looking towards the north right now. You can see the formation. So again, these are those cap rocks. This is the basalt. The contact mudstone is the next black line. The rhyolite, the lower mudstone. And again, you can see the location. We're only, I would say, 150 to 200 meters away from a drill hole that was completed in 2003. And again, that was by Barrick. They didn't hit anything in the contact mudstone. They didn't bother sampling anything in the rhyolites, and they stopped short.
Just to clarify to the viewers, so it's only the contact mudstone that hosts these bonanza or ultra high grade veins.
Yeah, exactly.
At least in this images, it looks very small. The contact mudstone, is it that compared to the rhyolite in reality?
Yeah, well, typically the contact mudstone isn't very, very thick, right? It can range anywhere from 10 centimeters up to, 20, 30 meters, right? Mudstone thickness is not necessarily perfectly correlated with the amount of mineralization that's occurring in it. There are lots of examples that have been mined by Barrick in the main zones, which were only 3 meters thick, but ran on average 150 grams per ton gold equivalent. This is a situation where thickness and size doesn't matter. So let's come back to this problem that we had. Here's the Eskay rift. We introduced this earlier in the discussion. This is a model that works extremely well for us. However, there's the potential that all good things must come to an end. Again, I've told you that this model works. This is where the most of the mineralization occurs in the Eskay rift, which would be located here. And then you see that, eventually these fault blocks terminate into a single point, which is sort of reminiscent of what is occurring right over here. Now, if you were to look at this, just through what you're presented here right now, you've got that termination point, the rift ends. You've got all these drill holes that were performed by our predecessors, and they hit, essentially no mineralization. Again, if we came back to it and took a look at how this thing evolved, we're contemplating an offset. So here's your rift, and then it was subsequently faulted again, and then the rift continues. We talked to a few guys at Barrick, and they thought that this was something that had happened, but they couldn't achieve the budget. Now, when we also took a look at some of our magnetics data and our structural geology and the modeling that occurred down here, our belief was that there was the offset. And what I've done here is I've just taken the Eskay Creek deposit, this portion of it here, as a footprint to basically show what size this could be or where it could be and how we could fit it in. There's only 2 drill holes. They were situated in that area. Again, it's very simple that they could have missed. They might have hit a very thick or very thin portion of the contact mudstone.
So all of this showcased, which is quite large, at least in terms of area. Your theory is that could be a contact mudstone with high-grade gold in it.
Exactly.
Where do you expect that all to be situated at depth vertically?
Vertically, probably 1 to 1.5 kilometers down. Because as we go north towards this, everything starts to plummet and get very, very deep. Now, why is this so important? Well, what are the odds that our very first drill hole, which only measures, you're taking a piece of core that's only 4 or 5 centimeters wide, managed to basically find the needle in the haystack and adopt mineralization that came out of here? If we go back to what we were seeing in the 21A West zone, you'll remember how I showed you, mineralization that occurred right below the contact mudstone, but the contact mudstone was barren. So what does that mean? Well, the rhyolite hosted mineralization that we've intersected in 1081 had to come out somewhere else. So again, this was drilled in 2022. We were very excited about what had happened. We did a considerable amount of desktop interpretation and analysis, determining where could be the next contact mudstone extension of the Eskay Rift. And what we essentially did is a number of drill holes, basically totaling 13,000 meters over 10 holes, that tested this area out here. Now, we're still waiting on results, so I can't really comment on anything at this point.
How many parent holes did you drill?
I believe we drilled 4 wedges off of 8 parents.
You must have gotten back some assays. Why haven't you released any of them?
That's a great question. To be completely honest with you, the labs are so backed up right now. It is on average 62 days before we receive analyses from the lab, from the time it's shipped.
But you had an assay lab on site, but you couldn't use that for actual releasing results. You could just use it internally, right?
Exactly. So if we needed to make an informed decision at site, just for our own internal use, then yes, we could use the assay lab that's on site. However, because it's not accredited yet, and 43101 reasoning, you still need to send your assay or your rock samples to an accredited third-party lab.
In other words, are you planning to release all the assays in one batch?
I would imagine so, yeah. I would hope that by Q1, we would have absolutely everything back, and that we would be able to announce the results.
If you would actually mine this in the future, what sort of minimal widths would you need?
I personally tend to use, when I'm doing the exploration and my own targets for something economic, is what I call a grade width of 30. So as an example, if it's 3 meters and it's 10 grams per ton, that's 30. Let's say it's slightly different. It's 1 meter of 30 grams. That still meets the criteria. So again, down in the contact mudstone in this area, at these depths, we're not looking for that rhyolite-hosted mineralization as an economic product. We're looking for the next Eskay Creek, 30 grams per ton over 10 meters type mineralization. And that could be an extreme game changer, again, if the thesis is correct and if we latch onto something. Again, just doing a switch here, and this is something we tend to forget about. This was in 2020. And this is the even lower mudstones. So again, here's the basalts. Here's the main deposit. You can see the contact mudstone, rhyolite, lower mudstone, big dacite package, and then the even lower mudstones. This was an isolated drill hole that we took down, probably about 1 kilometer. And at the time, it was a brand new discovery, and it demonstrated the scale and the tenor of this mineralized system. So as an example, 6 grams per ton over 17 meters, 21 over 3.5, 11 over half, 17 over 1.38. We saw a lot of high-grade mineralization down in this even lower mudstone unit, and there were no other drill holes in this area, including ours. That is one of the deepest holes that we had ever drilled up until we started focusing on the Eskay Deeps. So again, this is an additional target. What's a postulation, a concept? Well, maybe it's the water tower zone. This is the synvolcanic fault, and it continues down to this area here. Maybe it's analogous to some of the stuff that we see in the 23 zone, where there's lateral mineralization that sits along this. So again, there's still big potential that exists at Eskay Creek, but I think what we're doing now is moving from more of an open pit perspective with respect to ounce building to more of an underground.
Where's the 109 zone? Because that wasn't showcased before.
The 109 zone, yeah, that's a good question. It's one we tend not to talk about because this is what was originally discovered by Prime Resources back in the day. It was drill hole 109, which started Eskay Creek. And you can see the amount of development that occurs in here. This has been completely depleted. And so there's nothing really left of it.
These holes in 2020, why didn't you follow up on them?
There's 2 things. Like, deep drilling is very expensive, obviously, right? It's time intensive and it's capital intensive. So again, this was change in focus. So during 2020, if you think back, that was also the COVID years, shall we say. And we had drilled this hole as we were interrogating the water tower zone with other drill holes in the area. And then in 2020 also what happened was we had accepted 100% ownership of the Eskay Creek project from Barrick, at which point we were allowed to move forward and perform all of our infill to basically convert all of the inferred to the measured and indicated that was close to the development. When we were still under option, we were not allowed to drill within 50 meters of any historical mine development for safety reasons and also environmental reasons. So once we had made the purchase, okay, this was great, but we had another focus, and that's where we put 10 rigs on the project and basically came up with the 5 million ounces and converted it all from inferred to measured and indicated.
So say that you find a significant intercept, call it above 50 gram meters. How would you go about defining and delineating it?
That's another great question. Okay, so as it stands right now with this, even lower mudstone intersection from 2022, this sits all by itself, these intersections. There's no other drill holes around it to corroborate it, to give it confidence that there's something there. Now, so that never made it into any resource. One drill hole a resource does not make. So what we would do is, instead of drilling additional holes, we would probably just test at least starting with the short range variability. So here we could put a wedge in this drill hole and drill away from it. Go up a little bit further, place another wedge, drill around it. So that way we're saving ourselves the cost and the time of all the meterage to get up to surface. This hole is still open, so it's very easy for us to get back down it, start placing wedges, daughter holes, and testing all around this one. And then make a more informed decision as to whether it's something we should be following up on. Maybe we drill 3 or 4 daughter holes around this and they all run nothing. Or, in a better case situation, 75% of them meet criteria, in which case that's a good problem to have, and we'd have to revisit the idea. Good. So we'll just touch on the Snip project. Prior to us owning Eskay Creek, we invested considerable time and money into the Snip project, which is an underground mine. Again, very, very high grade. We got 100% of it from Barrick, again in 2017. And it was a very high grade producer, a historical production of 1 million ounces at close to 30 grams per ton gold, and considerable amount of underground workings and development that's already in place. There is no shaft. You literally just drive into the side of the mountain with ramps. It's in great condition. And ultimately what we did is we published a new mineral resource estimate in 2023. And we saw an increase of about 600,000 gold ounces from the 2020 MRE. And that was largely because we did conversion. We added confidence to it. A lot of this was in the inferred category. And, it obviously inferred ounces a mine does not make. So we had to upgrade it. Now, what does that ultimately mean? We're going to perform an engineering study, perhaps in the first half of 2024, and see if there is some sort of synergy that can be incorporated into the Eskay Creek project. What's nice about mineralization that sits at Snip is it's completely gold. There's no impurities, so you don't see any arsenic, antimony, mercury. Very, very simple, clean metallurgy. And we could even perhaps, just put a crusher on site to reduce the swell factor, throw it into trucks, and once the road is in place, just drive it straight to the mill at Eskay. So it's an option for us.
Would you say that the Snip's resource is well defined, or do you see exploration potential? And if so, where?
The mineralization that you're seeing here with respect to these stope optimized blocks is very well drilled, not only from the underground drilling that was performed by Homestake back in the day, but also us. So any inferred mineralization that we see at the deposit tends to be on the outlying fringe of the deposit. Okay. We've also done a lot of exploration drilling, towards underneath it, to depth, in and around Twin West, regionally, as well as, poking holes in behind the main deposit. And we didn't really see any incremental gains from the drilling that we've performed. So I would say at this point in the game, unless there's a massive revelation or an epiphany, what we have at Snip is currently what we have at Snip. And I would anticipate that some of the inferred could be upgraded with very little conversion loss. And we should anticipate seeing that ultimately added to the indicated mineral resources. Okay, good. And then finally, what I just want to discuss is regional. So, not only Eskay Creek, the other big focus project, and Snip, but as an explorationist for, junior mid-tier company, you want to ensure that your company has a pipeline of projects that are up and coming. So eventually, few years ago, what we did is we purchased another company, and they had very large land holdings, namely the KSP project and Kingpin, as well as there was a third one. There's another one called the Sophia property off in the Tootagon. So this summer, we've been doing considerable amount of grassroots, boots on the ground, no drilling type exploration in KSP and Kingpin. And basically what we're doing is we're looking for new occurrences of mineralization, performing soil analyses to get the next target, to get something that's drill ready so that we can move on to the next stage. What's also nice is here at the Gin, Bonanza, and El Dorado properties is Red Chris. And again, these would be sitting sort of up here off the map. Red Chris has announced, over the last few years that it's managed to extend towards the east its main zone. We've got magnetics data as well as, a property package that sits out here completely undrilled, which lies along strike of that. So we're excited to basically, once permits are approved, go in and test that concept and see if we can mimic something that was developed at Red Chris. And then finally, just recently, as part of our due diligence and being in helicopters and flying around all across the Golden Triangle, we noticed a lot of glacier recession in this part of the world. And this is our Hoodoo property. What's interesting is that our geologists have managed to see basically big red gauzinous sulfide stains that were never exposed on surface until the last few years with climate change and the glaciers melting and the recession. And upon investigating these, we obviously found that this ground was open, which is very, very atypical for the Golden Triangle. Like the Golden Triangle is essentially completely staked, but these were open. And we basically went in and for $100,000 grabbed this land package. And we're now sitting at 178,000 hectares. We're the third largest landholder in the Golden Triangle. And at the Hoodoo property, again, because there's so little information, it's never been drilled, and it's proximal to larger porphyry bodies. We're flying an airborne survey in here to get some more information so that we can hit the ground running next summer on that area and see what we can come up with. We've also sent the geologists off into the field for about 2 weeks, testing some of these targets, and we managed to come up with, brand new copper showings on surface. And the reason we know it's copper is it's stained malachite or azurite, that green staining that you see. And we're waiting on assays for that as well. So we're really excited about what's going on at Hoodoo.
But are all of your, Kingpin, KSP, Hoodoo, and also Jim Bonanza and El Dorado, are all of those sort of VMS, potential porphyry targets with more focus on copper and gold, or are any of them precious metals?
Good question. KSP, we've got the Sky Kyber fault system, which runs through it. And what we believe is, there are occurrences on that fault system, and they're dominantly gold-rich systems, analogous to something you'd see at Snip. Having said that, there's also porphyries littered throughout these areas, and we also get porphyry signatures. So the other target that occurs on KSP and Kingpin is porphyry. Now on Hoodoo, what we tend to see, again, it's very early days, but we're seeing porphyry signatures and some, mesothermal type gold signatures analogous to what we see at Snip. Again, there's so little work that's been done on that area that it's basically virginal. We have no idea what to expect in there apart from what we've seen so far. So we're going to write the story on Hoodoo.
When it comes to regional explorations, so which targets would you say are drill ready, and will you prioritize next year?
Right. Well, that's a great question. So maybe to just build on that, just a final slide with an update here. Again, we're awaiting the results from the Eskay Deeps and the regional drilling that we performed on the Eskay Creek project. So again, Q1, we should be seeing that. Now, once we get that information, right, we're going to incorporate it and perform additional interpretation and some target generation in the first half of 2024. So we'll be getting ourselves ready for the 2024 drilling field season at Eskay Creek. Now, part of that is also going to be, we're going to get a little outside the box. We're going to do a seismic survey across the Eskay Deeps. Now, the seismic survey won't tell us where mineralization is, but it should, and I'm going to say should, show us where that basin occurs, that rift basin. And that can help us target and incorporate all the assays that received from 2023 into a larger model. So that's interesting too. Regional properties again. So Hoodoo will have to go in, and once we get our airborne geophysics back, which we're doing this summer, we'll do some boots on the ground. So we'll be doing stream sediment sampling, soil surveys, mapping, prospecting, coming up with the best targets. We're also probably going to start the drill permitting process for Hoodoo as soon as we can, because again, it could take up to 8 months to get drill permits in here. Snip, we're probably not going to do anything at Snip next summer. KSP and Kingpin, again, the permitting, I believe, for drilling has started at KSP, so that's good. Kingpin, we're not quite as excited as what we see at both KSP and Hoodoo right now. And that's okay, because, we're being pragmatic about this. If there's no targets that really rank as high as they would in the other two properties, it's not going anywhere. We've done enough work. We're going to keep the project. Maybe we'll see something at a later date. The idea would be to come up with a really exciting drill intersection on something and get us a starting point on either KSP or Hoodoo. And again, permits pending, El Dorado. That is drill ready at this point in the game, because, the geophysics has been done, the historical soils work and grab samples and mapping has been done. Basically, it's a blind target that we would be testing next summer.
Our final chapter is strategy, where we primarily will ask Randy how he plans on funding the 713 million Canadian initial capex without significantly diluting shareholders. We'll also be asking him about regional opportunities to build a hub and spoke model, as well as asking him how he envisions Skeena Resources in the future. So let's talk financing. 713 million Canadian needs to be obtained in some way. How are we going to fund the construction?
There is a deal that Franco-Nevada did with G Mining. G Mining being a company that's developing a project in Brazil right now. And on that, the streamer royalty company, Franco-Nevada, provided the stream, a debt, and part of the equity, along with some of the equity coming from some other sources. So when we look at the cost of capital today, our shares were 0.2 times the NAV of the project right now. So raising a lot of equity to build it just isn't something that we see as being good for our shareholders. So instead, we're looking at doing something with one of the biggest streamers. We're in talks with all 3 or 4 of the biggest streamers right now. Their cost of capital is low. They're very competitive, looking for some projects right now. So we think we can get a good financing package from them. We've had a lot of really good discussions with them already, but now that the definitive feasibility study's out, that's really going to progress. So what we're looking at really doing is, if we look converting now to US dollars, that financing is typically done in. If we have a 550 to 600 million US total package, we would do probably up to about 350 million of that as a stream, something where there would be step downs. So long term, that's not in the resource right now. Their tail end would be about a third of the initial, as well as we want to put some buyback provisions in there. So about 350 on that. And then the difference being split up between debt and equity. So 100 to 125 or something kind of in that order for each of those. And all 3 of those components, we're asking for that same party to provide. So that's the overall financing package we're looking at right now.
Super. Well, I mean, and Eskay Creek is really perfect to put a stream on. I mean, you have a 6.7 million ounces of average silver production over the life of mine. So I assume that it's a silver stream that you're looking to.
Not necessarily. So some of our good longer-term, bigger shareholders are advocates of silver. And so they think there's as much upside or more upside on silver than there is gold. So they don't want us to give away all the silver. That said, we don't think we'd have to give up very much of it anyways, but we'll probably look to do a combination of a gold and silver stream.
Do you think then that you could fund the construction and still maintain a share count around 100 million shares, including options and incentive share units?
Well, there will be some equity given out. So my guess is it'll probably be over 100. I think we're at around 88 million shares right now. But that said, it's certainly not going to be a 50% increase or anything like that we think at this point. We don't have to do that much equity, no.
So this will be the fourth mill in the Golden Triangle. What regional opportunities do you see, both on your own property, but also on other companies' projects, so to build a hub and spoke model?
Yeah, certainly. So it was one of the reasons why we did acquire a lot of regional exploration ground. A mill like Eskay Creek can have a lot of different sources fed into it. It's really about some of the access into those projects. So, it's one of the things there. There's certainly a lot of opportunities as well for acquiring additional. Certainly at the markets are pretty sluggish right now. There's a lot of junior exploration companies that are really hurting at this point. So we certainly see, and we keep our eyes open. Walter is quite often talking to different companies for potential and what could really help us grow as well.
With that, we arrived at the final question, which is where do you envision Skeena Resources in 5 years?
Well, look, there's really two ways this can go. I love this project. It's a company making project. So we can build this, we can put it into operation, we can get running. And if we do, we're immediately an intermediate gold producer with a very coveted asset in Canada, producing almost 500,000 ounces a year. That said, it's also an asset that, of course, many other companies would like to see. So when you look at some of the top producers, having one asset in a jurisdiction like Canada is important, but one that also has, a substantial production profile coming from one operation is also important, and what some of those bigger companies look for. So we're certainly not looking at giving this away. We see where we can be as an operating company, but that said, there is a bit of risk to getting this project up and running. So if the right offer comes along, that's always a potential there as well.